Hey everyone, hopefully you're having a good day. My name's Andy, my channel's Finding Value. And again, I do a lot of technical analysis. I also look at the fundamentals, and basically I call the fundamentals a macro picture. I look at the macro picture a lot as well. I don't do too much fundamental analysis of the specific companies, as their fundamentals are going to radically change throughout this commodity bull market. They look the worst at the bottom, and they look the best at the top. So we want to be selling our commodity companies when the financials look the strongest. I know it sounds backwards, but that's how commodity companies work. And so I rely heavily on technical analysis. I rely heavily on the overall big macro fundamental picture. What I think the macro is, just to sum it up, is that we're in an expansion phase of real estate in America. Commodities are priced in dollars. So I think there's going to be dollar weakness at some point, maybe not in the near term. We're seeing the dollar strengthening in the very near term. But overall, when the expansion phase gets kicked up, and if they continue to print money, which is inflationary, we can see it. It's in front of us. I think it's going to put pressure on the dollar to go down. And that is one component of a commodity bull market. I'm going to show you some other ratios here where commodities are going to start to outperform stocks. And I'm going to show you some chart patterns just on regular companies. I'm just grabbing them from wherever and show you what I think is perhaps topping patterns and how vertical some of these have gone, like the company Apple behind me. I'll show you. So I'm going to paint a picture. I'm going to show you some companies that I own personally. And I think they're still very good picks. I'm going to give you some new ones that I own that I recently purchased. And again, this is not financial advice. You guys are going to have to do your own due diligence. I am not responsible for any mistakes that you guys make in investing, but I am and will take full responsibility for everything that you do make. I'm just kidding. These have been, their charts look incredible. And when it was September, October of 2020, I was watching SM Energy Bottom, and I was looking at its chart at all different viewpoints that we're going to look at here. And I just kept staring at it. And I was like, this thing is going to be so massive. And I couldn't stop looking at the charts. And I don't know what it is, but I almost find my answers by looking at technical analysis and a lot of the charts. And by ratios, which is the valuations, and looking at the big picture of basically interest rates, dollar, real estate, and looking and tying it all together. And what happened is I tied it all together and I said, man, this is going to look incredibly good for oil. And then what I do is I kind of test that thesis. I start looking at, well, what could oil do? Like 2, 3, 4 years out? Are we putting enough investment into oil to actually maintain production? And we're not. We're not even close. We are going to decline, I think, in oil over the next couple of years. I don't think we're going to increase it. In order to remain flat, I'm just going to take a conservative number. Let's say you have a decline rate of all the oil in the world of about 6%. If you look 2, 3 years out, what you're going to do is you're going to have to decline it by about that amount per year. And I'm going to make the numbers easy. If we're at 100 million barrels of production and a 6% decline means that in 3 years, you're going to need to produce 18 to 20 million barrels of oil to offset just the declines of existing fields. So you have to bring online 20 million new barrels of oil in 3 years to remain flat in production. Now, if we have increasing demand, which I think we will, we want to increase that amount. Maybe want to increase it a few percentage points. Now you're looking at maybe 30 billion barrels of oil or 25 million or something on the lines of that. I'm just throwing out numbers. So let's say we should be producing of new oil 20 to 25 million barrels of oil. And I don't think it's out there, especially if they haven't been investing in it. And that's only a few years out from 2020. And what happened in 2020 is we had this large decline, which basically screwed up the entire oil sector. And investments, it wasn't going in it from ESG purposes, and it wasn't going in it from purposes of investment and people chasing price, because it was literally one of the worst, quote, investments that people would probably label it. And I saw that as a huge opportunity, and I kind of went in a lot of companies that were oil related, exploration and production, and a couple of energy service companies at that time in 2020. And I just want to go over the charts. I'll touch on this stuff. And again, this is just my financial opinion. Do not use it as advice. But here, we'll jump into it. I'll show you what I'm looking at. And I put it all in one sheet. So the patterns that we look for at tops are ascending wedge patterns. Basically, you're coming in and it's squeezing up with a tilt higher. This is what a topping pattern looks like. You break to the bottom side, it comes back and retests, back tests, and then it rolls over. MasterCard looks like a topping pattern to me. And when looking at Apple on the right-hand side here, just look at the first phase of smart accumulation, you get institutional buying, and then you get a retail, everyone jumps in it at the end. This looks like a bubble to me. And I mean, that's just what the chart is looking like. And I wouldn't be jumping in there, but if interest rates remain low, it will not rotate the money out. If interest rates go up, and I've got interest rates at the bottom of this, we could see a rotation of money out of Apple and MasterCard, which we could be seeing the original, like the first step of it, and start rotating into commodity type companies because they're a good inflation hedge. And inflation is really the driver of all this, which happens under expansionary phases of real estate in America because commodities are priced in dollars. So I think the rotation is starting to happen very slowly. In the opposite spectrum, or the opposite end, we look for declining wedges for bottoms. And we could see a declining wedge and a bottom put in place right here for SM Energy. And we're starting to move on up with a lot of runway ahead of us. A lot more than what most people think. Same with Centennial Development. We were putting in this wedge. It actually broke in 2020, and then COVID brought it back down and gave us what I consider to be the best buying opportunity of anyone's lifetime, all in this area in here. And we're still, I would say, just starting to get above the previous breakout in 2020, just above that, which means we have a long runway to go ahead of us for Centennial Resource Development. And these are, I call these a few of my cheetahs. And cheetahs are it's something that's very powerful, can move very fast, and can go up at a very fast rate. They've been killing it, so to speak. And then we've got two that are kind of lagging behind that I recently purchased in oil and gas. And I'm not saying that you guys should buy this, just do your own research. So this one's kind of a laggard. It's going in this downtrend channel, and I think it's about to break to the upside. That's Northern Oil and Gas. And then Crescent Point up in Canada. This one has a basically descending wedge. It broke out. It was going to break, but COVID brought it back down and gave us even a better buying opportunity. I think it's about to break its accumulation phase pattern here very soon and probably head on higher to greener pastures at higher prices. Another one that I think is a good pick is Comstock Resources. It's been lagging behind the others, and we recently broke out of some patterns here. It was one that I brought up, that somebody had brought up on the channel, and I started looking into it and said, yeah, this thing looks pretty good. I threw some money in it down here, and I would continue to add into it, and I have, into this strength as we break through these patterns. And this is massively depressed from before this. I mean, it massively depressed. Now I've got SM Energy here. This is a zoomed in picture. I know that we had, this is SM zoomed way out. So I'm zooming in on this right-hand side there. And there's the right-hand side. We've got this pattern where it kind of makes this sideways action, pull up, another pull up, and then a down move, and then a V bottom, and we're starting to come back up. Looking at it from a big picture view right below it, this circle here, and where I think this could potentially go, is analogous to this circle here. And if you look at the actual setup, what I'm doing here is I'm saying that when you zoom into this section just in here, this is the pattern it creates. If you zoom out, it creates the same pattern, and this pattern repeats over and over and over. This pattern here is the same pattern as this pattern here, and we're coming right to the bottom of that, which is down here. This one's overblown, as that was the 2008 crash. We hit the bottom here, and then we started coming back up. I propose that this area here is about this area here as we're coming on up. Now, the location can be different because this one got really distorted. So this could be all shifted higher. But it's tough to say. It's tough to say where this is going to go, but I think we are in a good, strong move higher. Looks good. Centennial Resource Development, if you compare these two patterns here, are roughly the same pattern, just two different companies. So I own both of them. This guy's they're both highly leveraged companies to the price of oil. They do have a lot of debt, and hopefully they do very well. Switching gears into some uranium. These are some of the ones that I was kind of recently looking at. What I'm looking for are patterns that haven't necessarily broken and run already. That's why I chose these two up here, is because they haven't run yet. They're still contained in their patterns. And a containment is just a herd mentality of humans. And the pattern basically contains that herd mentality until it doesn't. So I'm looking for patterns that in energy companies that haven't really broken out yet. And Fission 3.0 was one that looked like a pretty good entry point here, which I got into. Fission Uranium looks like it's trying to break out of this. It broke out and is back testing, retesting. And that's where I like to buy it, is in this area. Deep Yellow's doing the same thing on a long-term perspective. It's back testing, and that's where I like to buy. Forces Metals is doing the same thing. Bannerman is as well. Canalaska's got a nice pattern that it's trying to break. It hasn't broken it yet. Laramide, it broke out to the upside and is back testing, so that looks good too. We've got I'm going to zoom in here, CRB to S&P 500 index. So this is a ratio. When this ratio bottoms and starts to come back up, it means that commodities are outperforming stocks, and we're seeing this outperformance with a break of the pattern just recently. And again, I'm not saying this is going to go straight higher. It's going to fluctuate up and down as it goes up, and maybe it does go straight higher. I don't know, but what's important here is that the pattern's being broken, and it's breaking it to the upside in favor of the commodity index in relationship to stocks. What I think is going to happen is that we're going to see an outperformance of commodities from this point forward. That is kind of my expectation by looking at this ratio and the break to the upside. Looking at the NASDAQ composite, and I'm just looking across all these sectors to see what's happening, it looks like we're breaking to the downside, and we could potentially have some downside here. Why would we be breaking on all these stocks? Well, the reason these got priced so high is because we were in a declining interest rate environment where interest rates have never been so cheap. And that's what we have here is the 10-year US Treasury yield. This is a yield. It's an interest rate. And when you get yields all the way down here, this is what pushes stocks so high. And then eventually what happens is when yields start to go up and they start to break these patterns and start to move higher, people are going to finally realize that stocks are overvalued, because when interest rates go up, it's going to shrink the price to earnings ratios on your stocks, and stocks fall under those conditions. And what happens is those conditions favor commodities instead of stocks, and you'll see commodities start to outperform stocks under an increasing interest rate environment. So we're seeing the interest rates start to move higher, we're starting to see the outperformance in the ratio of the commodity to S&P 500, which we're seeing right here, and breaking this pattern. And we're starting to see patterns form and break to the downside for the NASDAQ, the S&P 500, and certain stocks. And I grabbed some more stocks here. This is the Trade Desk. It's a very popular cloud company. I think they do cloud. And it's been moving sideways. Its momentum is basically was killing it to the upside and has slowed and is moving sideways and could potentially head lower. Maybe. We'll see. I'm not calling tops here. It's very difficult to call tops, but we're starting to see the momentum slow. It's going sideways. Roku is another leader that was doing very well, and you can see the momentum is slowed and it's moving sideways and could potentially break to the downside. And interest rates moving higher is going to be a stiff headwind for these companies. We do have a strong dollar, and dollar-denominated assets will be preferred. So that is a tailwind to it, so long that the dollar stays strong. If the dollar pulls up over the next month or 2 or 3, I do suspect at some point that dollar is going to weaken with that expansionary phase in real estate that we have going on, which means it's going to be inflationary. Inflation means a weaker dollar. And I wanted to compare a couple of things. I know we have a lot of oil and uranium guys on the channel. I'm a big oil bull, and I'm a big uranium bull. I am basically very evenly mixed amongst both of those sectors. This is the 6-month performance of a few in the sector, and this is the 1-year performance of a few that I own. In the 6-month, you can see Sandridge Energy's killing it, 244%. We have Encore Energy at 39, Forces Metals at about 11, SM Energy at 62%, and Centennial Resource Development at 66. I am overweight SM Energy, Centennial Resource Development, Encore Energy. I'm neutral, normal weight on Sandridge and normal weight on Forces. On the 1 year, looking at them, the same companies, we have Sandridge Energy at 678%, Forces at 419, SM at 1600%, Centennial at 1,000, and Encore Energy at about 400%. So I know I've got some questions that people have asked me. They've asked, what do I think is going to perform better in this bull market? And what I'm going to tell you is, I don't know. I don't know if uranium is going to perform better, and I don't know if oil is going to perform better. I can tell you this. At the bottom of the oil market, I've never seen oil that cheap. And I've never seen the companies that cheap, like by a long shot. The companies were like literally pennies on the dollar. I also think that uranium has had extreme lows from their bottom. Now, what's a better value today? I think they're both very good values. I think they're both incredible opportunities to invest in. I bought some laggards in the oil companies, so I did hit those up. I continue to cost average into uranium companies. I don't know which one is necessarily the best value. I would say, looking at it, some of the uranium companies have had some runs, but they are they're breaking these big long-term downtrend patterns or accumulation phases where you got that resistance line going across. So I think we are super early in this game in uranium, and I'm incredibly excited for what's ahead of us. I'm not a huge Sprott. I don't need Sprott to push this higher. It may accelerate things. It may not. I don't really care about it, to be honest. I care about buying value, getting the undervalued assets, and having the deficits in front of us. That's going to push this thing no matter what. The timing, I'm not as worried about. But I do think we have decent timing, and I think we're going to see higher prices in uranium, I think, in the near term and midterm and long term. Oil, I listened to Eric Nuttall, however you want to pronounce his last name. He has some really compelling videos on the supply-demand characteristics that could potentially happen within the next 10 years. And I thought I was pretty bullish, and then I listened to him, and he is equally as bullish as I am. And he looks at this basically what I described in the beginning of this video with the decline rates and the deficits potential in front of us, which isn't even that far in front of us. We're talking like a year or two where things can get kind of funky. And investment hasn't been going into oil, and I still don't think it is. And we could see massive, massive deficits that we've never seen before. I don't even know what that means for price. I don't want to make price projections because I'm an ultra bull, and I'm just going to give you numbers that people are going to disbelieve. But we'll see what happens. And I still think that these companies, and with the charts that we have here, they still look excellent. I think they're still good value. And I think the runway ahead of us is still incredibly long. So I'm sticking with them. I haven't sold any of those companies. I just continue to accumulate these companies over time, and the returns, I mean, they're getting big, and I'm getting excited. I think there could be some in here that over the next 5 years or 4 years, I'll have all-time personal records for what they've returned for me. And I'm going to be curious to see where they actually end up. I may have a 100 bagger in there. Maybe. We'll see. Fingers crossed. Hopefully we still have a 10x from where we are today in them. They may even have more than that. And hopefully I get a huge return on some of them, and hopefully you guys do as well. Who've been on the channel this channel's been open for 1 year and about a month. That's when I first started it, and you guys can go back and watch my earlier videos. I'm a pretty timid guy, wasn't too loud in it, but my message has been the same the entire way. I opened the channel because of a commodity bull market that was coming in front of us. I think the energy sector is one of the best sectors. I am still a precious metal bull. I still like some of the metals. I think copper is going to do incredibly well. I like playing it with Nova royalty. I just like royalty companies. And I hope we have a good runway ahead of us and a good ride. Hopefully it's an easy ride and not too volatile, because if it gets too volatile, people get kicked off the bull. And I'm pretty patient, so whatever. So I kind of just ride it no matter what. But if you guys like this type of analysis, if you like this kind of listening to me talk about commodities, click subscribe, join our community. Let's ride this thing higher together. Give me a thumbs up for the video, and thank you for listening. This is Finding Value.